Udaya Kumar Hebbar is the managing director, now joining in. Good to have you on board. I'm going to start off with a comment that you'd made earlier, highlighting that the aim is to cross 25,000 crores AUM mark in the 25th year of operations. But what exactly is your long-term roadmap, and do you see this kind of growth sustaining over the next 5 years?
Yeah, I think, pleasure to be here. Actually, what we said is for 25 years, definitely we'll cross 25,000 crores. But, we are confident that this sector have a lot of opportunities. And we believe that we can grow between 20 to 25% CAGR for next 5 years, which makes us, we can actually be a 50,000 crores by next 5 years time. So that is what our roadmap, we spelled out that we'll be able to do such kind of growth considering the highway available in this market and the potential available in this market, particularly in the rural.
Okay, so yes, as you highlighted, the growth story is looking quite promising, but what about your asset quality? Because we understand that prudent underwriting and growth go hand in hand in MFIs, and you recently said that the north and northeastern states are seeing healthy trends, but given the recent floods, any downside risk? What is it that you're penciling in?
So we don't see a significant impact because of floods or cyclones sometime. It's a temporary blip. Sometimes it happens, but normally no. What we guided is our credit cost will be between 1.6 to 1.8. We don't see the crossing that kind of credit cost, at least for the near terms. So we believe it will be still stable, and there may be some pocket, 1 or 2 districts may impact because of the extreme floods. But on an overall basis, it won't be a significant impact for us.
Sure. But with the upcoming elections, do you expect any impact or systemic disruption from potential loan waivers?
Not really. Actually, elections have been coming every year or every 5 years in every states. And, the administration, the government, and the whole financial sector of the government always believed that microfinance is quite important to create capital at the bottom of pyramid. I think, from the regulator to FinMin, always gives very high importance for developing this segment. And the regulation in place and the bureau in place. So it's always supported. The loan waivers sometimes addressed to the farm loans. Normally, not microfinance. Well, normally, microfinance are not lending to farmers. We are lending to landless laborers or a very small marginal farmers with less than 100,000 rupees, which is not a farm loan attracted or a farm loan waiver attracted segment actually. So far, we never faced the farm loan waivers impacting microfinance. So, and then no significant impact we faced, at least in the last 10 to 13 years, what have been in the business. So I think only time we lost money more than 1.5 to 2% is demonetization and COVID, which was an unknown element for us. But I think microfinance industry is quite resilient, have been coming back always very fast, very strong, thanks to the customers' ability to come back faster.
Okay. But tell me, since the RBI has kept the repo rate unchanged so far, but the expectation of a rate cut cycle clearly has been delayed because of what we're seeing with agri-inflation specifically. How are your cost of funds expected to evolve going forward?
It's quite interesting, actually, but the cost of funds have increased to some extent in the last 15 months, almost 250 basis of repo rate increase, almost 150 basis of MCLR increase across the banks. But, Grameen is able to maintain the increase of cost of borrowing only by 60 bips in the last 15 months. So, which is a tremendous and a commendable achievement by ourselves, which helped us to price our customers lower than the competition always. So, I think we will be able to maintain that with our diversification of our own borrowings beyond the domestic borrowing, including foreign borrowing, the public issue of NCDs, the DFIs, impact funds. We are able to diversify into many different segments of borrowing, which helped us to enhance our ALM positiveness plus the managing the pricing much better. So which in turn, we are able to be in a very competitive position in terms of the pricing to customers as well.
Okay. Now, after the removal of the caps last year, your yields as well have inched higher. How much of the book is yet to be repriced? And given the diversification into non-MFI, what's the outlook on your overall portfolio yields?
So largely the book have been repriced. Only about 16% of the book is yet to be repriced, which will be between Q2 to Q3. Whereas expansion of a product beyond microfinance, we started pilots last year. We started scaling today, and then we are about 250 crores of book now. And then our view is, next 4 to 5 years we should be able to reach about 6 to 7,000 crores.
Okay. And what is the cost of borrowings have they been on the rise? Yields have also been inching higher as we spoke about. So what's your outlook there?
So our cost of borrowing currently about 9.6%, which is quite stable. So maybe there's 20-30 bips might go up because some of the repricing from the lenders also is it delayed because of the 1 year MCLR we borrowed. But similarly, the pricing also some 16% we had to reprice. Therefore, we may still be able to manage our NIM between 12.5 12.7% stably. So that is possible. So there won't be impact on our NIM because of either cost of borrowing or the pricing changes.
Sure, Mr. Hebbar, great to have you today on ET Now. Thank you so much for speaking with us.
Thank you so much. Pleasure to be here.